Hi, this is Zak Mir with the US Chartbreakers here at Zak's Traders Cafe for Tuesday, the 28th of November. Starting off with the S&P, which is dithering near the old September resistance area. I suppose that was around 45.40, so we're just above that. Initial target here, 46.05, which is a resistance line from 2022, the summer there, and above that, looking for up to 4,800 over the next 4 to 6 weeks. The proviso is that we need to stay above recent swing low support for this market, 44.95, and if we can do that, then we would be looking for further upside, even though we've already come up a long way and more than most probably expected. Moving along to the stocks and starting with Conduit. Here we've got a triangle breakout near the low. Looks quite encouraging, to say the least. The reason for the enthusiasm is the way that we've had bullish divergence going into the current recovery. So lower lows there for the October-November period, but higher RSI trace and breaking that resistance line there at 160, looking for an initial target there up to 370 by the end of next month. Big picture target over the next 2 to 3 months as high as $10. So let's see if the shares can deliver in Conduit, but we want to hold above that 160 area in the interim. On to one of the stars of the last few sessions, Direct Digital. Always looked like a winner, and initial target there just under $8. Next target was up to 11, and above 11 we can upgrade the situation to a resistance line projection from September last year, and that's currently heading up to as high as $15.20, which we're looking for by the end of next month or even sooner. Obviously that time frame factors in a period of consolidation for the shares. Onto a stock which has decent credentials at the moment, and we're looking at Curis. Here you can see that we've had a falling trend channel. Top of that channel there around $11.50. End of day close above $11.50. We could open up the prospect of up to $20 by the end of January, on the basis that the shares would then retest the 2023 resistance zone early in 2024. Upside value while we hold above recent neckline resistance, and resistance on the way down around $9.30. Moving on to a stock which had a bit of a fan base a while ago, GSI Technology. Let's see if we can get that back again. Obviously it had a great early summer period. Current situation is that we're trying to make progress within this broadening triangle base, the top of that triangle around $3.35, and we're looking for that while we're above the 50-day moving average at $2.45. A nice uptrend in the RSI window as well, even after that bear trap that we had at the end of October. Moving along to La Rosa, and here we've got the shares, in a U-shaped turnaround. We've had the neckline broken there around $2.10. Above that, we're looking for the top of the triangle there from last month as high as $4.70, and that could happen as soon as the end of December. But obviously, we've got to hold that neckline area at $2.10 in the meantime. MoneyHero has lived up to its name, at least for the bulls. Here you can see that we've had this U-shaped turnaround. We broke neckline resistance around $1.40, and above that we've been looking for a very ambitious sounding target as high as $4.50, which actually looks as though it could be hit well before the end of next month, which is the time frame we were looking at previously. Moving along to a stock which may also deliver for the bulls. Here we've got Perfect Corporation, and a nice setup here, broadening triangle base, gap through the 50-day line. That's at $2.80. Above that we're looking for up to $4.10 by the end of next month, and another situation where there's a nice uptrend there in the RSI window to back the turnaround. Pulse is next, and here you can see that we're looking at a triangle break and also a resistance line break from back in May. That line broken there around $7.70. Above that we're looking for the top of the rising trend channel from the beginning of the year to hit $12 as soon as the end of next month. So a nice situation shaping up there after that gap higher that we had earlier this month. On to the last three. First one is Automotive, and here what I call a sideways shuffle over the near term. So we've got a rising 50-day line which just started rising, and a breakout now through $4.95 above that. We're looking for $8.60, and nice sort of inverted head and shoulders move as well after the gap down that we had. So everything looking very nicely set up there for what could be an explosive move. Bullish divergence as well, and a nice stop loss area around 495 to give us upside at 860 by the end of next month. A stock which has done very well of late, a safety shot, and we can see that it's basically sort of got into extreme territory there, $7.50. Current situation is we're trying to work out where the support should be, which ideally would be towards 380. Above 380, looking for a retest of the $7.50 area as soon as the end of next month, and hopefully a bit sooner than that. Finishing off with a stock which still yet to get its act together, but has some positive signs after an extended bear run. You can see at Tharimmune that we've got resistance at the 50-day moving average and a line of resistance from the start of the month. The magic level there around $4.80. Above that, we're looking for up to $7 by the end of next month, or 4 to 6 weeks after any break of that 50-day line. In the meantime, ideally, no fresh lows for the shares. That's it for me today. More updates tomorrow.